You've heard it all, right? The AI boom of 2025 has been called an intelligence revolution, a whole new industrial age. But under all those headlines, there's a different story taking shape. We're going to dig in and investigate whether this historic boom is actually a historic bubble, one that's getting ready to burst. To really get what's at stake, let's just start with one number, $5 trillion. Now, that's not the value of the whole AI industry. Nope. That's just the market value increase for three companies, NVIDIA, Microsoft, and Apple, right in the middle of this AI craze. I mean, that's a number bigger than the entire economy of almost every country on Earth. And it all leads us to one really critical question. Are we actually living through a new technological paradigm, a true revolution? Or are we just witnessing the biggest, most spectacular speculative bubble since the dot-com bust back in the 2000s? That's the question we're going to explore. And to find the answer, we have to do what you always do. Follow the money. Okay, so let's start by dissecting this euphoria. To understand the risk of a collapse, you first have to appreciate the sheer, unprecedented amount of capital that's being shoveled into this one single sector. I mean, just look at these numbers. In the first half of 2025 alone, AI startups sucked up nearly 58% of all venture capital funding. It's not just another hot area of tech, it is the entire game, consuming the lion's share of all investment. And that level of concentration, well, that's a classic sign of a mania. This quote just nails the heart of the bubble argument, doesn't it? The money is chasing some hypothetical future, not what's happening today. It's a massive investment wave built almost entirely on hype, with very, very little proof of actual, measurable profit to back any of it up. And if you're getting some dot-com era flashbacks, you're not wrong. The parallels are pretty stark. When analysts actually compare the two, today's AI boom either meets or even exceeds the 2000 bubble on key things like funding concentration and how much startups are valued at. It's a pattern we've definitely seen before. This tidal wave of cash isn't just some abstract financial story either. It has a direct impact on people, especially on content creators. It kicked off what's being called a content arms race, where suddenly the pressure was on to use AI tools, not just to be innovative, but simply to survive in a market that's being flooded with machine-generated stuff. But like with any mania, if you look closely enough, you start to see cracks in the foundation. So let's explore the really serious problems that are bubbling just under the surface of all this hype. And the first major crack is the human cost. That content arms race we just mentioned, it has led directly to a massive creator burnout crisis. We're talking 62% of creators reporting burnout, all driven by this insane pressure to compete with AI content factories. The very tools that promise to make our lives easier have just turned up the heat to post more and to do it faster. And here's what that flood of content actually looks like. It's not pretty. Research shows a third of YouTube shorts are now what people call brain rot, just low-quality, nonsensical stuff, and over a fifth of it is explicitly AI-generated slop. This isn't just making our feeds worse, it's a direct symptom of the AI boom prioritizing quantity over any kind of quality. This isn't just a problem for us consumers either. The real money, the big promise, was supposed to be an enterprise AI. But the return on that investment, the ROI, it's just not there. A shocking 6%, just 6% of companies see any return on their AI spending within a year. Trillions of dollars are being invested with almost no measurable business value to show for it. And then there's this long-term, almost sci-fi sounding threat called model collapse. Think about it. AI models learn from scraping the internet. But what is the internet being flooded with right now? The low-quality AI slop that they helped create. So over time, this actually causes them to forget reality. They start producing more and more generic, degraded results. AI is literally poisoning its own well. On top of all of that, there's a legal time bomb just ticking away. These huge landmark cases are challenging the very idea that using pirated books and art for training is fair use. If the courts rule against companies like Meta and Microsoft, their access to the quality, human-generated data they need to function, the entire foundation of their models could get cut off, like overnight. So you add up all these cracks, creator burnout, poor ROI, model collapse, these huge legal threats, and it all points toward an inevitable correction. So now we're going to pivot from the problems to the prediction, a potential timeline for how and when this bubble might finally burst.
So here's the predicted path. We've gone through the 2024 boom, and we're right here now in peak euphoria. But the early cracks are already showing up, leading to a predicted burst in 2026, which would be followed by a pretty sharp correction. Let's break down exactly how that might unfold.
Now, the collapse isn't expected to happen all at once. It's more like a cascade. It starts in early 2026, as startups begin taking funding at lower valuations, which shakes investor confidence. Then a major bankruptcy could hit, causing investors to run for the exits. By the end of the year, the money dries up, leading to a stock market correction and a whole wave of failures in 2027, which could kick off what people are calling an AI winter, a long period of cooled investment and interest.
And look, this isn't just wild speculation. It's actually just simple math. At the current rate of spending, analysts predict the whole venture capital industry will burn through all its available cash, what they call dry powder, by early 2027. And when the money runs out, well, the party stops.
Now, a correction doesn't mean AI disappears, but it does mean a painful shakeout is coming. So in our final section, let's look at what comes next, who's likely to survive, who gets totally wiped out, and what this all really means for you. The survivors? They'll probably be the giants. Companies like NVIDIA that make the essential hardware, and these diversified tech titans like Microsoft and Google that can absorb huge losses. The casualties? Well, that's likely to be the vast majority of those 300-plus AI unicorns, the hundreds of VC-backed tools, and any company whose entire business is just a pure bet on AI hype. So, what's the big takeaway here, especially for creators? The advice from this analysis is crystal clear. First, pause. Stop jumping on every new AI bandwagon. Instead, double down on what AI can't do. Build real, authentic relationships with your audience. Focus on uniquely human skills. And diversify your income, moving away from relying completely on ad revenue that's going to get squeezed in a flooded market. Ultimately, it all leads to this final question. The AI wave isn't going away, but the bubble of hype just might pop. And when it does, the market is probably going to split into two tiers. A low-value commodity tier that's just flooded with AI slop, and a premium tier for authentic, human-created work. The only question is, where will you be?